What's up, guys? Dave from Odds Assist here, going over our earnings call mentions tool. This tool is designed to get you an edge on the what will XYZ companies say on their next earnings call markets on Kalshi. So this is the kind of directory page. Any market that Kalshi has open, we track the historical mention rate across all past earnings calls that we have access to. So you see currently we have 12 companies in here, and that matches up with what Kalshi is currently offering. So just wanted to give a demo of one company today to show you how I use the tool, play some trades with it, talk some strategy using it. And I think Wells Fargo is a good one to do this with. This calls on Tuesday, April 14th. So tomorrow, as of this recording date. And when you first open up the tool, this is what you'll see. So you can see it's for Wells Fargo. You can also change companies here if you want. Instead of going back to the directory page, you can choose how many transcripts you want to view in the tool. So for example, you might be interested only in the past 2 years. You can go to 8, and then all the mentioned numbers will update from there. I typically leave it on all and just kind of look at the trends myself. And then you can also switch between whether you want just the prepared remarks, so the beginning of the call, the CEO, CTO, whoever else from the company will have statements. It's kind of longer form where they'll talk about, major highlights from the quarter, any forward-looking statements, things like that. So we're gonna add a Q&A option here too. But basically, if it's not in the prepared statements, then it's in Q&A. And what this is useful for is, one, if you're only looking at prepared statements, if something's regularly mentioned there, I think it tends to be more likely that it'll be said on future calls. And then on the inverse, if it's said in Q&A most often, it might be a good opportunity to buy live. So as you go through the calls, you'll notice that a lot of these prices, if they haven't been said yet, will start dropping. So if you know something's likely, if it's going to be said, is going to be said in the Q&A, it presents a good live buying opportunity. But we're building in some new signals to kind of highlight those automatically. But for now, you can still find those opportunities using this data. You also see the overall yes rate. So this is of all these words, how many times were they mentioned at least once. And this will also change based on the which filter you choose here for how many transcripts are shown. So if you only do the last 4, you'll see 54% of these words were mentioned at least once across these calls that we have here. So let's go back to all transcripts and kind of show you how I use this tool. I'd like to also use an AI tool, Grok. I like a lot because it can pull in some tweets from the company or any tweets that people have mentioning that company and whatever the phrase is. But you can also use ChatGPT, Claude, whatever you like. They're all pretty helpful. Just kind of take some of that extra research and make it a lot faster instead of digging in to Google News and things yourself, which I'll also show. But yeah, so let's dig in. To start, I tend to avoid things that are priced in the 90-cent or higher range. A lot of these will be said on the call. However, I've gotten burned in the past where I have one trade that's 90 cents plus and it doesn't hit, and that kind of wipes away all of the other profits. So I'm very careful with them. I'll use limit orders, as you see, and I think this is a good example here. So middle market said on almost every call. So last time, the only time we've tracked it not being said was way back in 2020. So this is almost guaranteed to be said, but at 95 cents, you're essentially risking 95 to make $5. So a lot of times it's just not worth it, and you can't get the volume in to make it meaningful. So for me, a lot of times these, I just like to avoid them. But what I will do sometimes is take a look at the order book and try to get a limit order in a little lower. So in this case, I suspect that this has a good chance of not getting filled, but I'll put it in anyway. So we have some bids in the 90s, decent amount here at 89. So let's just put some in at 88, kind of fill in that gap. And like I said, it might get filled, might not, but it's okay either way. Consecutive, it's another one. It's priced pretty high. It's been said nearly all of the earnings calls. It wasn't said in, let me just make my screen full screen again. It wasn't said in 2024 Q4, but every call since then. I also have some of these transcripts pulled up on my other screen. So I think a lot of times when they mention this, they are talking about their headcount reduction. So for example, in the last call it says, our ongoing focus has resulted in 22 consecutive quarters of headcount reductions. I think there's a good chance this gets mentioned again. But again, it's priced pretty high. So what I will do here, you see there's a bit more of a gap here. So if someone's buying no, we want to be basically somewhere, one of the best few options here. So what I'll do is go in and place a limit order at either at the highest bid or just above it. In this case, since I want it to get filled, we'll go right above the highest bid. So you see that and you'll see it pop up right there. That way, if someone's trading no, will be the first option. So again, might not get filled, but I'd be happy to get in at that price. Private equity, this has been something they've been saying a lot lately. Let's see, last call, they were talking about corporate debt finance business and secured lending to asset managers and private equity funds. They've been saying it last 3 calls straight. There's a bit of a gap before that, but overall 17 out of 24 calls. So that's quite often. And right now it's priced at 57 cents. I think that's good value. So let's go find that private equity. And in this case, could buy some of this, but again, I'd rather just come in and place a limit order towards the highest bid. So we'll go 50, match what's here. There's only 13 or so contracts there. And I think this has a good chance of getting filled. Again, if someone's going to buy no, we're the best ask currently available. So you'll see this happen. Someone just jumps you by 1 cent. It's only one contract though, so I wouldn't go and immediately update this to 52 cents because you'll just get in a little battle with some bot that's just always trying to get the best bid. So you can generally ignore that. I'll check this probably tonight and tomorrow before the call to just evaluate any of my resting orders and see if I have to update them. But I think this has a good chance of getting filled here. Maybe by the end of this video, it already will. All right, let's keep going. Buyback. This is one I actually already did some research on. So last year, sometime Wells Fargo announced a big buyback program. I think it was in May, so it kind of lines up with these 3 mentions here. And this is one I actually talked to Grok some with. So I just said, has there been any news on Wells Fargo buybacks lately? And talks about it. We won't have to go through all that, but then I just say, do you think they'll mention on the earnings call? They haven't mentioned it since 2025 Q2, which we see here. And it says, yes, they'll most certainly mention it, blah, blah, blah. And I said, then why haven't they mentioned it on the last 2 calls? It said they've mentioned buybacks on Q3 2025 and Q4 2025. However, they actually said repurchases, not buybacks. And so I went back and forth talking about the specific word buyback, not repurchase. Got it. Thanks for the clarification. And then confirms what our tool is showing. They haven't said it. They use repurchase and share repurchases instead. And then it says how the analyst question did include buyback, but that doesn't count towards Kalshi's market. It has to be one of the representatives from the company. And yeah, it just kind of goes into that more, how they tend to use repurchase a lot more. So this is one that I think is actually a good opportunity. They've said it on over half of calls, but not the last 2, as they kind of have shifted to the repurchase language. There's still a chance they say it, but I think it's decent value on no for this one. So here you'll see there's no gap at all actually between asks and bids. So what I'll do here, nobody at 52, so I think maybe we'll come in there and then I'll check back and decide whether I want to up that price. I will say when I'm doing no on limit orders for no for these earnings calls, I always have them cancel at the scheduled start event time. And the reason I do this is because if the call's going on and they say buyback, this is going to immediately get filled. So you'll see, just even though I traded no, the flip side of it is still a yes at the inverse price. So I put no for 52 cents. That means there's a yes available at 48 cents. So if I left this going during the call and they say buyback, that will automatically get bought up and I'll lose instantly. So I just cancel it at the scheduled start event to avoid that situation. And doesn't mean I won't buy no during the call, but I want this to get filled before the call, and that's why I set the cancel there. So let's keep moving on. I have some notes on what I like here. The next one I flagged was inflation. So next on the list, see, they've been saying this on quite a bit of calls lately. Not a ton of mentions on each call, but a lot of times they talk about how their income growth in relation to increases in inflation and debt levels. And it's almost every call they have a very similar line that comes up over and over. So I think this is likely to be said on the next call. I might have asked Grok about this one too. Yeah, do you think they'll mention inflation? And then just kind of gives you the context of what's going on with Wells Fargo, inflation. Just gives you a quick idea. It's an easy way to do some quick research. So, and then sometimes I'll even say, just to kind of see what they say, what do you think the percent chance they'll say it is? Grok said 75 to 80, which of course isn't, I don't think you should be basing your trades off Grok's estimated percentages, but it's just interesting sometimes to see. And it actually aligns with the current price. So for this one, also going to place a limit order, and I'd like to, there's not much at 77, not much at 76, and then starts picking up around here. So what I'm going to do here is we'll stick with this 600 contracts at 76. So we beat out these two guys. And if someone's buying, these will get filled quickly, and then we're next up. So do that. There we go. Next up, delinquency. This is one I looked into. Didn't feel too comfortable with it. It's been mentioned on a lot of the recent calls, but only one time. Let me check the most recent transcript. It's talking about monitoring portfolios, things like that. So I think this has a good chance of getting said, but just the kind of sporadicness of it, I want to avoid it. We'll say something you can look at is a quarter by quarter basis. So the next call is the Q1 2026 Q1 call. So I'll look at past Q1s and see if there's any kind of trend. You see it mentioned it there, mentioned it there, mentioned it there. Mentioned it there. So they have been mentioning it on most Q1 calls, which not everyone though. Let's see with the order book. If I could get in at a good price, I think it's not too bad of a buy, but there's not much of a spread here between the bid and asks. Maybe we'll just do a smaller position here. 50 at 56. All right, let's keep going on. Headwind. This is just a bit too sporadic for my liking. On their last call, they were talking about rate cuts by the Fed. But then how that could drive a headwind, but then the headwinds could be offset by loan and deposit growth and continued fixed asset repricing. I don't really like that one, so let's just move on. Severance, this is one I actually did quite a bit of research into. They've been mentioning it a lot lately. I think they had a big severance package. Last call, they were talking a lot about laying people off and the severance packages and how those expenses would be. Those expenses are costing them money. But what I've found interesting, they say our assumptions do not include this is the last call, do not include significant additional severance for 2026, which would result in approximately 700 million decline in severance expenses. So even though they say they don't think it's going to, severance will be a big factor in 2026, I think that with how much they mentioned in the last call, this has a good chance of getting brought up again, just because they don't have those expenses now. So they kind of hinted at it in the last call, and I think that decrease in expenses is probably important for them. So go yes on this one as well. Again, I want to match or beat the highest bid. In this case, I'd like to get them filled, so we'll come in at 71. Someone might jump us with some contracts, but looks like not quite. So good with that one. Next up, AI. This has been mentioned on 3 calls straight. It's at 74 cents. This is one I think might be a good live buying opportunity. So you see, it's actually a great example. So on their last 3 calls, it was mentioned on every call, but if you look at their prepared statements, it wasn't mentioned at all. So in this case, I wouldn't buy right where it's at now. Instead, I'd wait till it's live. And there's 2 ways you can do this. You can either place a limit order now at a lower price that you're comfortable with, or you can just listen to the call live, watch the order book and see what's happening. So say we'll come in now at just say like 52, kind of position ourselves right in the middle here. And then tomorrow during this call, I'll be listening and watching this closely. I usually add a note somewhere to make sure to pay attention to this live, because what you'll see as the call goes on, this price will start, assuming it's not said in the prepared remarks, which it hasn't been lately, this price will start to drop down, and you'll be able to get a better deal trading it live than you would if you just bought right now at 74 cents. Likely you're going to be able to get in at a better price than this live. So this is a good example of live trading strategy with these markets. So I'm just making a note for this one to check it. Next we have inflation. I think this is also likely to be said. You see, it's been mentioned on the past 10 calls, about 8 of them. Let's see. And it's usually said in the prepared remarks. Take a quick peek at the last transcript, see when they said it. Same line as, we already did inflation actually. Never mind, ignore that. Where are we? Artificial intelligence. So did that. Go down to oil, which is an interesting one. I've been trading this a lot, especially on the airlines earnings calls and Carnival cruises. What's interesting with oil is a lot of companies refer to it in different things. For the kind of transportation companies, airlines, cruises, they tend to say things like fuel costs. And it's actually there's been some great value, because everyone assumes with oil prices right now, because of the war in Iran, that it's going to be brought up. But often companies call it something else instead of oil. And I think this is one I talked to Grok about. Here we go. Do you think they'll mention oil? For reference, they haven't mentioned it since 2022 Q2 call. Gave me an estimate. They don't say oil. Let's see. So they talk about how in these forms they have to file, they list oil, gas, and pipelines as specific commercial loan industry bucket. but it's a very small portion of their portfolio, which I think means it's less likely to get brought up. So yeah, I like this one. If you see here, it's almost never said. It's been a while. No is at 61 cents. I think that's decent value. There's always a chance it gets brought up. I think could be some questions about it, but again, they might refer to it as something else other than oil. So we'll do the same thing here, kind of come in towards the highest bid range. We want to do this to pay less fees. So if you just buy what's available, you're going to pay the taker fee, which is much higher than the maker fee, which I think sometimes maker fees might be 0 at some points, or for some markets. So two reasons to place limit orders: you get a better price, and also you pay less fee. So again, we're going to set a cancellation at the scheduled event start time for the same reasons I talked about earlier. We don't want it to get mentioned and then this auto get filled. So come in there. I think this one will get filled pretty quickly. Recession, this is almost never brought up on their earnings calls. Every now and then you'll see it, but not regularly. So I think this is another good no buying opportunity. Let me pull up the 2025 Q1 transcript and see what the context was. So it looks like it was a question related to their reserve. So they talking about changing their plans based on the path of the economy. We got to see where this starts to go. We have a much deeper recession. Would you see allowance? So it's kind of talking hypotheticals, not even about the current economy. I don't think there's any real recession concerns. What you can do is check Google News. Just kind of see there's not much chatter about it. And there's some here, but even in the past, you don't see much mention of recession here. Even when, like 2020, of course, COVID, some mentions here and there, but I think no at 64 cents is really good value. And you'll see decent spread here between the asks and bids. I think for this one, we'll come in at 57. I don't really care about competing with that one share right there. This is one I might add to later on. I feel a little more confident about this than the others, so I'll watch this, maybe check back tonight, see kind of how the price shifts. Good till, okay. I'm gonna make sure that I had the expiration set. I might add to this position. We'll see how things shift. If yes, people are buying up, yes, then maybe I'll buy more, see if I can get in at a better price. But I like that. And then what else do we have? Basel 3 or Basel 3. This is some kind of new regulatory framework. And something just happened with it. Basel 3. I don't fully understand it. Haven't looked into it much yet, but I have noticed it popping up on a lot of these companies' earnings calls as strikes. So if you look at some of the other banks, you'll notice they all have it, and they're all priced pretty high, which is interesting. And I actually just listened to the Goldman Sachs earnings call, and we don't live update this based on the call, but they actually did mention it quite a few times. I guess it wasn't a strike for them, but I was listening for it because there's so many of these banks' earnings calls coming up that I was curious if Goldman would mention it, and if they did, I think that's kind of, you can use that as a proxy for others, give you a sense of how important it is to these kinds of companies. So even though it hasn't been mentioned on any of Wells Fargo's earnings calls, there's new developments with it that I think make it a lot more likely to be said on this call. So this is one I actually like a lot, and I'll show you this. This is something I do sometimes, not always, but sometimes I'll kind of split my strategy. So I'm not always placing limit orders. Sometimes I'll only take what's available. Sometimes I place limit orders, and sometimes I'll split it. So I'll get in some at a price if I like it. So just to make sure we have some position on it, I'll trade yes, take some of the 68 that's available, and then come in, get the rest at the same strategies as before, near the highest bid. 16 shares here. So let's match this 65. There's a lot more liquidity as you get to 64 and 62. So we will come in here at 65, and to make it a clean 100 contracts, assuming this gets filled, we'll buy 75 more. All right. Let's see. Last one, Iran. I think this is a good no. I've been listening to a lot of earnings calls as I trade these markets, and almost no one ever mentions country names by name, unless it's like they're talking about buying from China or something more specific. But at least in relation to Iran and everything going on, people usually just refer to it as the Middle East, the conflict in the Middle East. So I think it's not likely to be said. It hasn't been, I don't know if it's been said on any of the calls I've listened to. So I do like no a lot here. It's priced pretty high, but I think that's okay. I don't think it'll get said. So let's come in. We'll do 50 at 83. And then I noticed there's a bit of a gap here. No one's at 81. So we'll do another 50 at 81. Oh, yeah, I want no. 4 10 a.m. Okay. All right. So that's it. We've covered most of the strikes they're offering. Headwind was the one I didn't feel great about either way, so want to avoid that. And then tariff, I don't know if we talked about that one. This is another one that I'm just not too comfortable with either way. Probably lean no if I was going to trade it. I think I was watching this on Goldman Sachs Call Live, and they never mentioned it. It was actually the one strike that went no of the whole call, which is interesting. Maybe that makes no a good opportunity. Let's see when it's usually said. You have one in 2025 Q2. Okay, so it's usually mentioned in Q&A, it looks like. So the no prices will just get more expensive. So if we're gonna take no on this, we'd want to buy it now. If something's only said in Q&A, the yes prices should get more affordable, the no should get more expensive. So we'll come in, we'll do a small position here. Let's see what, there's no spread between the bid and ask. So maybe we'll just say do 50 if we can get in at 57. And this is one I'll watch, probably check back tonight, tomorrow before the call, kind of get an idea. But that's another strategy that I think people don't use enough on these kind of markets, is looking at related companies that have calls for the same quarter before the company you're evaluating. So really, as we get through this week's earnings calls, there's quite a few going on. Based on, what Goldman, Citi, Wells Fargo, JP, what they say tomorrow, and Goldman today, can use that to get an idea of what may have value for these other banks coming up: Bank of America, Morgan Stanley, Truist, Ally. So it's a strategy I don't think people are using too much, and you can either just go to those past calls here manually, or you can use our tool. And like I was showing with Goldman, even though we're not live updating for the call that just happened, you can tell it went yes or no based on the prices. So if it's 100%, 100 cents yes, that means it was said. 1 cent means it was no. So I think that's all I have for today. I will say one other thing. If you look at the mobile view, hopefully this shows up properly in the screen recording, but it's a bit easier to get a sense of which quarter it is, or trends by quarter. So like trends by Q1, by Q2, by Q3. There's certain companies are much more likely to say words in a specific quarter. So especially Q1. So I'm not sure it's the best example, but for example, Q1 looks like buyback is more likely to be said relative to the other quarters. But really what I'm looking for is trends that are, I'm not sure there's a great example for Wells Fargo, but sometimes you'll see companies that have, it'll be like almost all no's or no mentions, but then you'll see in one quarter, like Q1 or Q4, they always mention something. So not too relevant for this call, but something I recommend checking out. You don't have to look at the mobile view. You can of course just see like Q4, and look that way. Just a bit easier in that mobile view, just because you can see this drop down, and all the Q4s line up, the Q1s line up, and so on. So some strategies for using our earnings mentions tool. If you have any questions about it, about the strategies, about the tool itself, let me know. If you're interested in accessing this tool, you can, I think we show the first 5 or 6 terms for free. Problem with that is it's often the very likely terms. A lot of them are in the 90-cent plus range, which I tend to avoid just because I think I mentioned this, one of them can tank. If one of them missing can tank the rest of your profits. If you buy 10 yeses at 90 cents and they all hit besides one, you're losing, say it's 100 contracts, you're losing $90 on that. And on all the others, you're going to make $10. So you'd break even in that case. And it's often just not worth the risk for me. That's why I like to place limit orders a bit lower on those high ones. Like you'll see middle market, you still have that limit order. Might not get filled, but if it does, I think it's great value. So yeah, hope this helps. If you're interested in unlocking the full data, you'll see CTAs to go to unlock the full data, and I'll send you to this page where you can learn more about Prediction Markets Pro. This is our only paid product on Odds Assist Pro right now. And with the one subscription, you get the earnings call mentions, which I just showed you. You get the sports mentions tool. So this is for the what will the announcers say markets. Cool about the sports mentions tool, which I'll do another video on. We just added announcer filters, so you can see only games where these announcers were the announcers before, which has been super valuable. Highly recommend checking that tool out. We also have politics mentions tracker. So what will Trump say this week, this month? What will Mamdani say in his next press conference? Things like what will Jerome Powell say in the next Fed meeting? What will be said in the next White House press briefing? Things like that. All super powerful tools, work similarly. And the strategy that I just showed, you can kind of apply those to all of them. Entertainment mentions, this is right now Mr. Beast's next video, and then the next episode of Survivor. And then our newest tool, which is our first non-mentions tool, is our Trump executive order signing tool. So we pull all historical data on Trump's historical signing or executive order signings. We break it out by day of the week, so you can get an idea of when he's most likely to sign them. And based on that, you can often, almost every week, find some really good value on these markets. We have a new related tool coming out, so keep an eye out for that. But you get all these tools for $19.99 a month. You can easily make back that subscription cost with the edge I think we give you. A lot of people trading these markets are just kind of going on based on intuition or simple Google News searches like this, but they're not really using historical transcript data, which gives you a huge edge. You can of course look up transcripts and try to build something yourself, but based on building this tool, I'll tell you it's a lot harder than it looks. There's a lot of weird edge cases. You have to filter out the analyst questions because those don't count towards the Kalshi market. So we just make it easy. When Kalshi announces a new earnings mentions market, we start pulling in the transcripts. And in most cases, we have a company live in the tool before the Kalshi market even opens. So when Kalshi announces one of these, you'll see here, it'll say starts in, not this begins in, that's when the actual call starts, but it'll say starts in 12 hours or whenever the market actually opens, which is a huge advantage because by the time the market opens, you already have all this historical data. You can see, start to get an idea of what things should be priced at, and you can often get the most value by trading early. So yeah, if you're interested in checking this out and getting full access, you can subscribe to Prediction Markets Pro. If you have any questions about the tools, strategies, how to subscribe, anything like that, feel free to leave a comment on this video. Shoot us an email at hello@oddsassist.com. We also have a learn section on our site where we kind of dive into these tools a little bit more. So yeah, that's it for today, and we'll talk next time.